All right, welcome traders to the Bookmap Academy session. We'll go through some
All right. Well,
analysis of some of the Academy members here. Coaching and mentoring, that's what the whole Academy project is about. We offer this as a free service with Bookmap so that you can get some insight and feedback on your trading and become a better trader. It's really simple. You can just go to bookmap.com here and then go to the More button, and then on Bookmap Academy here, click on that, and you can read through it here and you can apply here. Now, well, let me go through disclosure, and I got some news here. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, the new news. We've talked about this a bunch already. The Blue Jacket, the Bookmap Blue Jacket competition launches today. You have until the rest of the end of the month here to create content, and you can get a Bookmap for 3 months. Here, let me show you where you can find out details on it. Just go to bookmap.com/blue jacket. And you can get 3 months of Bookmap Global Plus with data too. So it's a nice offering. Starts today, ends April 28th. You can read through this, but there's a big change in here. And that is, this is now integrated within the Bookmap Academy. This made sense. We've been talking about it for a long time. We're just launching it now. So any Academy member can also get this or enter at the same time for the Blue Jacket. All right. So if you let me just explain a little bit. So when you sign up for the Bookmap Academy, you can get Bookmap for free. You're assigned first to the Bookmap Junior Academy, or you have applied to the Bookmap Junior Academy. And then if your content is good, you will be bumped up to the Junior Academy, where it's the starting point. See if you can meet the thresholds, qualitative and quantitative content levels. And then if you do, you can get Bookmap for free in the Bookmap Academy. Now you're in the Academy and you need to keep up that threshold and improve your trading. And you can become a coach as the next step. And then you'll get data for free. You'll turn around and help some of these new people coming into the Bookmap Academy or Junior Academy. You can also become a streamer later on. So we have this whole pathway and this road for you to get to onboard you and become a much better trader. That's what the Academy program is about. Now, the Bookmap Blue Jacket competition is a monthly competition. And you might as well enter and see if you can win Bookmap once a month, or someone's going to win. And you'll post your content into the Academy Discord chat room. Okay, so this is where you'll post it in here, right? Okay, right in where you guys are posting all of your content right now. What you'll need to do though is put in a hashtag BJC. All right, it's listed in here. You'll see it, the information here, what you need to do in order to enter. Let's see. I think we have it in who's eligible. How do I post my content? Yeah, right here. Okay, so you just go into the Bookmap Discord Bookmap Academy room, and then you post your content and your explanation, and then hashtag BJC. So that way we can filter for it and know that you are applying for the Academy as well. Right now, if you're interested in that, you can take a screenshot here or just go into that Academy room. You can sign up also via these links in here from the blue jacket here or from the Academy page. So basically, when you sign up for the Academy page, now you haven't necessarily signed up for the blue jacket, but you can just by putting in the hashtag. Vice versa, this is the change. When you come into the blue jacket in here and you sign up here, you are automatically enrolled into the Academy. All right. So you join the Academy here as it says, and then you enter into the Bookmap jacket competition. All right. So anyway, it's just a subsector within the Academy, basically. Long story short, that's what it is. Just put in the hashtag into your content, and you just need to sign up to the Academy. All right. That's the long story of it there. But nonetheless, let's move on. So let's see. We've got a bunch of content to go over, and we're a little shy on coaches today. A lot of people are away. Jack is away. Slowdown is here, but he's off this week. Stan had a last minute thing he had to go to, but we've got some of the content here from them in their Notion files, and then yeah, I've got a bunch of files or content to go through as well. So anyway, we'll start with some of the images here from Jack. Then we'll move over to Stan. And then we'll go over to mine in here, and there's a bunch of different people in here. All right. So anyway, yeah, let's open it up here and get started here. Okay. And we'll open the mic for you guys. Just a minute here. Get this YouTube over on the other screen. All right. Okay. All right. So let's see. We have a new member in here, Laura, from Germany, and Laura, we can open the mic if you like. I understand that maybe you didn't want to. You had kind of mentioned before. But anyway, let's take a look at some of your content in here. And you've been following some of the German streamers that we have. We have a bunch of them now. We have a new one, Marco, that will start next Monday. This Monday, we have Robert Rother, which I believe is your coach or mentor. And then we have Treven Trading. We have two different guys there. And we also have Oliver Sparring. And he's been doing it with us for quite a while. So we have a bunch of different guys. All of them are excellent traders, guys. So anyway, Laura was looking at a short entry up here. I like it. There's a couple of things I actually don't like about it, but the short entry at the initial balance low after liquidity was taken and it seemed to exhaust. So this is a nice combination in here. There is an uptrend in here, which I mean, you very clearly have your reasons though. And that matters. You know, this is your criteria. You have high liquidity. You have a high time frame level right here. And let me get the pen tool out. Okay. So hold on a minute here. Let's go through that again. All right. So you got your higher. Now, why isn't that working? All right. Let me quit this. I just don't understand. Sometimes this thing works, sometimes it doesn't. All right, let's try this again. Okay, sorry about this, guys. A little bit of a hiccup here. Yeah, still is not working. So let's quit. Let's try this pen tool again. Okay. Oh, now it's working. Okay, good. All right, and now we can go full screen. And let's see if this thing works. Okay, got it. All right, so really nice. You're waiting for your high time frame level. Okay, that's great. You're looking at, and this is one of the biggest strength in Bookmap, one of the biggest strengths, your liquidity level. Okay, you see price going up toward your liquidity level. Fantastic. It trades right into it. And then in here, now you're looking for your exhaustion. And you say seems to exhaust. Looks like it to me. So nice confluence of events in here. I believe that's where you took your short. So, and then stop to break even. Here's your stop that you are trailing, starting to trail down. Just a couple of things, and your target down here. I love that. I love that you. This is really nice. I love that you. This is actually a pretty good area for it down here. I like it because this is where this move took place. If this is going to be a turnaround, then you're probably anticipating a move right back down to here again. Anyway, but what you did is you took your take profit here and you moved it down to the liquidity down here. Okay, so yeah, that's kind of that's a big move. Now I don't see a whole lot of this is like 20 minutes of price action, so I'm not really quite too sure if that is going to unfold. This is about 8 points right here. So you're looking for a pretty big move. I don't know if this worked out for you or not. Maybe we got more slides here. Yeah, no, it looks like you got stopped out at break even here. Yeah, so I was about to comment on that before you got stopped out. This is pretty aggressive in here, and you're kind of asking for it to get stopped out because this is still in an uptrend, and we don't see this trend broken yet, right? So it is still trending, there's probably going to be some sort of distribution pattern up in here. Okay, even though it's hitting your high time frame, it's not going to go like this. It might. We never know, but it's more likely that the transition has to take place from sellers to buyers, or I'm sorry, buyers to sellers. It's starting to maybe a little bit. You can start to see the bars. There's a little cluster down here as well of some selling, but we need to see a little bit more. And a lot of times you'll see, a big move back up to the top. Everybody gets stopped out, moves back down, kind of goes back and forth here a little bit, and then it breaks. Okay, so this is pretty aggressive with your stop loss. That's my main point. And this is also maybe a little too lofty an ideal here for your take profit. So likely, you can see already high liquidity coming in here at this little area where it broke out from. So that's probably a pretty good target for the initial move. And then it will probably bounce after that, So then maybe if that is the case and you take some off and you're looking for only this move here, then and you take some off and you still have some on, consider an aggressive stop loss at break even. Because if it goes back up, just get stopped out, and then you can look for, you still believe in this and you still believe in this target down here. That's when you can look for the reversal to take place. I hope this all makes sense, and I don't know if you're interested in commenting here, but anyway, that's what I see in this. And then the follow up here, stopped out target, not enough selling pressure to break. Yeah, I mean, you can see it came back down to about here, kind of bounced around, and it went back up. So it takes a while for these transitions to take place. We can see it in here in the volume as well. Like, it's just, we don't see that, especially in here. I mean, this is so easy in hindsight. I mean, here it's obvious, right? It's a little more difficult in here, but I just don't quite see it unfolding yet. In fact, you can even see this pattern in here. This isn't really a reversal pattern. This is kind of a flagging pattern. Does this make sense? We talked about this in the webinar. And let me know if you guys have any questions, and open the mic. If anyone wants to ask a question about this, we'll just open it up for you, because it's kind of important to understand this in the structure here. That this is still the dominant force. Okay, this is still the dominant force here. Everything else is taking place within that at this point. All right. Even though, like, you start to see that it's just like really just like one big kind of like flagging type of pattern in here, and you see a little bit of buying coming in here, which gives you a little bit of a clue that we come back up again. That's when we're looking for maybe continuation. So anyway, just that's what I see, but really nice, clean, clear documentation, and really like it. I didn't read through all of Jack's comments in here, but he welcomes you, and you might want to read through this. You do have access to this, or we will give you access to this file in here. Okay. All right. Let me see if there's any questions at this point. I can't speak. Well, you can certainly communicate in English very, very well, Laura. But anyway, no worries, no worries. All right. Anyway, we went through that in quite a bit of detail, and you've been doing really great work, though, and I wanted to cover it in detail and give you some feedback. Okay. Is my volume too high, or? Oh, just the volume. Okay. Yeah, let me show you that. If you want to adjust your volume bar down here, see this number here? Okay, this represents the amount of volume. At this point, it would be 2,500. So it just gives you a reference here, because we don't have the exact number here on the delta bars in here. So we just have a kind of an overall. So that's what that 2,500 means here. So, if this is 2,500 up here, this is probably about 2,000. Okay, and that would represent this big dot in here. Right? So that's what we got. Now, if you want to adjust this bar down here, just hover over the number and then left click, hold, and drag it up and down. All right. So yeah, it's a nice feature that we implemented a little while back. Okay. What would be the telltale sign that the buyers are in control? Just the impulse move. Yeah, absolutely, Rob. It's the impulse move, and then the way that if we take a look back at Laura's pattern in here, or you see what I mean, like, in terms of a transition. See how this is still the strong move here. It's really important to understand this concept, because we see it again and again. I know many times on the webinar we've looked, and we're looking for like some sort of distribution pattern in here, and then heavy selling coming. Now here's a bit, right? But we're looking for where those buyers meet sellers and the transition takes place. And this isn't it. In fact, we've seen days where we think it, during the webinar, it's like, wow, God, it really looks like it's going to reverse. We think it's a reversal, and it's exactly this pattern in here. It just keeps on kind of dribbling down, dribbling down, dribbling down, but you don't see the sellers really engage and take control of it. In fact, it just came down to where those buyers came in, and then we started to see some buying activity in here. Okay, so hope that makes sense. And yeah, let's move on. Okay, good. We got a lot to go through, guys, and I want to get to everybody, but Laura definitely deserves some time there. Ambassador X. All right, let's take a look at his. And let's see here. Sellers refreshing orders. Okay, so you're looking at your market pulse in here, and yeah, holding price up into high liquidity up in here. Okay, so now look at the transition in here. Okay, and beautiful like trap in here as well. I love seeing this. This is going to be a stop run in here. It is, and then entry on pullback. Beautiful. I love it. So the transition again. Now this is a distribution pattern up in here. See how it's not flagging like that? In fact, maybe it's a bit of a flag pattern in here, kind of flagging up, but then it distributes. Here are the sellers in here. Here are the sellers in here. Buyers still trying, more sellers. Buyers still trying, more sellers. That's the distribution pattern. That's where the sellers come in and take it. All right. I hope that's clear. You guys you'll see it. You'll also see it. It might be easier to see it in the bars, but you'll see it also in the clusters in the volume. And look at both. Rob requested going over the volume bars one time in the webinar, so we did in detail. All right, so Ambassador X, I don't know if you're in here, but we can get the mic on for you if you like. And Dark Trader, I see Dark Trader, the crypto contest winner. I know you don't speak English, but we'll do, I don't know if Raphael reached out to you. We'll do a special event with you. Would be great. Get your insights. Okay. So anyway, this looks like more of, there's some trapped in here, but it looks like more of a stop run, which we can kind of see in here. Maybe, is that it? It's kind of hard to align it, but something like that. And then they just can't hold it. And the sellers come in and they come in hand over fist. So especially in here, you can. This is the move here. Likely, I mean, we never know, but likely you don't get that pullback. Up to here on a strong move like that. If there's anything, there might be a little cluster in here that it might come back up to on a retracement. But these kind of strong shifting moves move the market away from the cluster up here, and it starts to trend. And that's your markdown process in here. I know we're talking a lot about Wyckoff, but the concepts are very simple, and you guys know these stuff, know this stuff from Wyckoff. Okay, yeah, and you entered on the pullback in here, which is really great. So you were waiting for this to unfold, and then you got in on the pullback. Yeah, nice. All right, so that's what I see here. Let's move on, and that's it. That's it from Jack. All right, and then stands. We got stands, and guys, I got still a bunch to go through in here. Like I got Crash, I got Allan, slow down. I think also is covered in here by Stan, which was too bad. Stan had to be away last minute. I got Shark Blue, I got Robbed, and I got a new guy in here as well, Allan M. Dune Runner. Here's Stan taking a look at your stuff, and let's get it up here and take a look. All right, so you got your criteria. That's excellent. Laura, that would be something to consider as well. Look at some of these images, like from Slowdown or from, well, a lot of them, Crash, Shark Baloo, Dune Runner, Caesar, a lot of these guys, Donkey Face, they're using their list in here, their criteria list to go through. Use this to your advantage. Slowdown, he has an image as well. He knows exactly what he's looking for. And then when those things align, he will take the trade. Okay, so you had your kind of list there, but it was kind of scattered over time. I think you'll find that will serve you well. We found it has served people pretty well. All right, so Dune Runner, I don't know, we can, I think you're probably in here. Yeah, there you are. So we can turn on the mic for you. You got a lot of stuff here on the chart, so I think maybe might be better if I let you kind of explain it here. I think we've got the if you want to just turn on the mic. Bars over bubbles. I slow down. I think it's the combo, because the bubbles, they show very different things. You know, the visualization of the volume. The bars are very clear in one element or one aspect, but the bubbles are very clear on where that's taking place, and that's really important to understand. Okay, so anyway, yeah, Dune Runner. I guess you don't have the mic. There you are. Okay, so you're still muted somehow. And I'm kind of curious about all these things on here. You got your stops, your icebergs, you got your Scott zones, which is great. You got your 1, 2, 3, 4. See, Laura, how you've got number 1 here. You sell ice around GC around 10, 12 a.m. Okay, so here it is in here. Oh, there you are. Now you're on.
Am I going good there? Okay.
Yeah.
Now I just got to get back to the video feed. I can't see anymore. Here we go. Okay, perfect. So yeah, what I was showing here was one of my trades that did not quite work out, and kind of going through a series of mistakes I made. So I got some of the sell ice, which was, you know, the first circle there, the 1. And then, so I was trying to set it up for an ATR for a reversion trade, and I had the trade already in place. But then before the trade came on, I got a new event, and I should have immediately canceled the previous trade, because that, with the new event, it voids out the previous entry position, because now we have new information. So I didn't do that quick enough, and then I got in, and it's just showing me, okay, I should have done this, I should have done this, I should have done this. So I was just kind of journaling that, just to kind of beat it into my head and make sure I stay on top of stuff. So when I got, you know, I'm watching, you know, 5 different markets at a time, and sometimes everything's going off at once, and, you know, still kind of new to Scott's method, and just trying to learn and piece through it.
Okay, so but I'm a little curious. I mean, this purple, the, you know, or violet triangle up here, that's a sell order. So were you going long in here?
No, I was trying to go short.
Okay, so did you add to did you re-enter a short position up here?
No, I think that was closing it out here. Hang on, I'm just.
Because that looks like a
Yeah, so I think I entered short, and I let me bring it up on a different screen here. I'm just
okay. I mean, yeah,
using my
I do
laptop
see
for
a beige line in here as well. So and also here, which is your I mean, those are this should be a buy limit, and this should be a buy stop up here. So that's correct. And I also see some lines in here. Just got a lot of stuff on the chart.
Yeah. So yeah, there. So got some sell ice, and then set up my entry. Got a new event. Should have immediately canceled. That's at 0.3. So I think I was looking to go do an ATR reversion trade back to the short.
Uh-huh.
And then when I got the new event, I should have canceled the trade, which I didn't, which is that 2 and 3 circled.
Uh-huh.
And then at 4, I was just saying, oh, I see some up and down, and I probably could have scratched out of the trade. But I just said, oh, well, the trade's already on. Let's just see what happens, which is another no-no.
Mm-mm.
And then I finally ended up getting stopped out at my, position 5, which was then a full, ATR against me the other way. Now, what I could have done, and I don't know if I did this or not, I'd have to go back and look at my notes. I could have entered another reversion trade at 0.5 and tried to short again back to the other event. But I was just channeling my journey between, that 10:10 up to the 10:30 mark.
Yeah, yeah.
For time.
Yeah.
So
understood.
20
Okay.
minutes of making mistakes and ended up getting stopped out.
Yeah, yeah. Well, I mean, really, I really applaud you journaling a loser in here. Most people tend to. I mean, it's just kind of human nature that we put in the ones that work out to boost our confidence. And this is where the learning is going to happen, though, is from the losers. It's just how
Yeah,
it
I try and
works.
do, maybe, not quite every other, but every, second or third one I post, I try and show a loser. I mean, we all have them. I mean, who's kidding here, right?
Yeah,
So let's just learn from them.
exactly. So
So,
yeah, I know. I totally agree. I mean, I can, you know, I think it's kind of similar to some of the feedback we gave you, I think last time, um, that you, I think I'm seeing at least like Scott's zones or some of the reversion type of setups, etc. But I'm not seeing that information match the order flow or the transactions yet. Especially, I mean, gold is a pretty big mover or volatile mover. And so if you look at, if I see it in here, I can see them pulling liquidity right in here. Yeah, I hope everyone can see that blue line, or this blue pencil. And then look at the volume in here compared to the volume in here. The volume in here compared to the volume in here, and it's just trending. There's something happens up in here that's a little odd, but you can't see it in here. But there's a big stop run in here, and that's you can see it in the sweeps indicator, the dots, white dots. But this thing is still trending. Here, this is starting to get a little more interesting now. You get some selling. Still one more big one. I would imagine this probably reversed up in here. It probably did something more and then might have reversed after coming up.
I think it did on that one, but yeah, like if you look at right at 0.3, I mean, that was, I think close to 300 on the sell ice plus a little bit of stops,
Yeah, yeah,
about 100 or so, 150 stops. So that was, I mean, both of those are inherently, negative, but they don't always move the direction you want them to. So
that's true.
it didn't work out eventually. I think had I held it probably would have come back around some, but I can't hold past my stops. I
Yeah.
got to just take the stop.
Yeah, yeah. No, that's a good point. I mean, like here, that's what Scott does, is he's looking for these events. And now I need to go back to the yellow. He's looking for these events, and it's a beautiful confluence there. I mean, you've got your
Yeah.
you got huge icebergs, and you've got a stop run. Beautiful. And
Right. That's what we call the double whammy, right?
yeah,
Yeah.
yeah,
That's the.
exactly, exactly. And it's too bad that we couldn't get like a structure break in here. So if it did something like this and then came back, retested, and then went, you know, um, it just kept trending though. And yeah, it came all the way up into this area here. So um, I don't, is there anything else that you want to add to this?
No, I would just hope people follow the rules. So I didn't follow one of my rules, which is if you make a mistake, then you just get out of it, even if it's against you. Just okay, reset, and then take
Yeah,
a pause, and then if you want to re-enter, you can. But I mean, once you notice a mistake, you should just close the trade. And I did not do that, so I paid for it.
yeah. Yeah, like again, it's really great to see losses in here, and we can give good feedback on it. There's another thing in here, the way you're managing your trades, because it's right here on the chart, right? We can see it. So that's excellent. So thank you for that. And
Yeah.
that's it gives us some insight to uh, and what you were thinking. You held your stops, you didn't move them, and you kind of moved your take profit around a little bit, maybe because maybe the liquidity was kind of moving around or something, but you didn't move it too much. But yeah, anyway, good stuff to see that. Let's see here.
Yep. Just trying to put in a lot of content of both positive and negative there. I'm still working towards getting the academy. I'm still an applicant, so hoping to refine how I post and make it clear enough and concise. So.
Yeah, yeah, no, it's looking good. What are all of these numbers in here? You got your reversion 1, 2, and 3.
So that's part of the Scott's Zone tool, the pro version that
Ah,
we're still working out the beta.
okay.
So each one of those are positions based on if you see the capital and the risk. It shows the $50,000 account, and I'm trading 2%, which is basically $1,000, which isn't really because I'm trading micro, so it's really $100. And so to risk $100 on that, like that one where it says Rev One, the 4.0, you would put on four micros,
Ah, got you.
and that would be a risk
Yep.
within your guidelines.
Yeah.
So
Yeah.
it's just showing you how many contracts to put on in real time.
Yeah. Yeah. Nice. Yeah. That's a pretty handy tool. Um, yeah.
It
I'm.
does clutter up the quite a bit, and he's working on ways to have it only be for the last, you know, two events and stuff like that. But Johan's really working on some good stuff, and they're definitely refining it. So, but still beta.
Yeah. 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 I know he would jump over to like Excel spreadsheet, so now he's just got it all automated here on the chart, which is great.
Yeah.
Um, okay.
Yep.
All right. So any other comments? Else we'll move on with Valley fan.
Nope. Let's move on. That's fine. Thank you.
Okay. Thank you.
Appreciate it.
Um, so I don't know if he's in here or not. But uh, yeah. Anyway, um, he's a one thing for sure we know is he's a Valentino Rossi fan. So that much we know. So okay. So he's looking at some pivots. He's got his intraday S3 up here. And what's he looking at exactly in here? Is this? Oh, okay, he's got Tesla. Okay. And oh yeah, I think I remember this in here. Yeah, and he was taking. You can see his trade activity in here as well. So off of Thinkorswim in here. So yeah, he's got his here's his buy down here, and yeah, this is nice. So this is a huge sell off at the open, but down to, he's got, again, this is the pattern in here, or the chain of events in his criteria. Higher time frame. Okay, he's looking at his floor trader pivots. Okay, his intraday S3, and then, as this is coming down, it hits into high liquidity on the way down. He's entering in here, and then he took some partial in here, and then he got stopped out on a pullback here. Okay, so yeah, and you can see it in here. So this is entry. I saw it. Here's his entry here. Here's his partial, and then looks like maybe another few partials. Yep, and then a full, or the rest was a stop out here. So he captured the majority of this move on the pullback in here, in face of this huge drop in here. Okay, so that's pretty good, pretty nice. Yeah, his criteria for this is S3, higher time frame, the high liquidity, and then looking at some of these previous swings in here. He's also looking at, looks like his VWAP in here. Yeah, his VWAP in PDC or POC. I don't know what it's by PDC. Anyway, let's see. Valley Fan is not in here. All right, so let's previous day close. Okay, thanks, Rob. So yeah, that's that. And then we got one from for slowdown in here to go through, and I think slowdown. If are you? I don't know if your mic is on. It would be great to if you want to walk us through this. If not, I can go through. Just let me know if your mic's on. Okay. You're not hooked up. Okay. Well, anyway, real crystal clear, conscientious work on his documentation to clarify his own trading in here. He's got his flag pattern in here. He's got his checklist in two different places here, as well as over here, and then we can see it right in front of us. So here's this consolidation period, number one here, and then here. So Laura, this might be really helpful for you. See how he's got it marked up here in his image, and that's what he's looking for here. All right. So consolidation, boom. Here's your impulse move. Pretty clear, pretty clear stuff. This is a strong move, strong volume. There's a bit of a sharp pullback in here, so it kind of did a miniature flag here, and then it did a pullback here. This is pretty picture perfect because you see high liquidity come up underneath here as well. Get the pen and under here. So here's your impulse move into high liquidity, I mean, this is beautiful. So the move back, and then yeah, kind of curious about maybe and was the entry in here? I know you said it's here, waiting for the more buyers to come in. This would probably be okay too, because typically it's a smaller little trend line in here, and you start to see that buy cluster start to come in, and because it might move right away. It bothers me, so I usually I'm a little more aggressive, I think, sometimes, but this is equally as good, no question. And this didn't go against you, probably like maybe a ticket or something, but you didn't have any drawdown, so is what it looks like, and then just pure profit right up to your target. Beautiful. So and this is your second impulse move, and it's very, very clear here and here. Yep. Okay, so you didn't take the trade, but yeah, it's a beautiful pattern though, and you can't ask for much more. So anyway, guys, like I hope that these have been helpful for you if you go to bookmap.com and you go to education and then the strategies and setups. We only have a few in here right now, but these are really powerful, and it's going to work again and again and again. And it's just the market mechanics on a higher time frame in here that make up these patterns. Okay, so for example, this impulse move, a shallow pullback followed by an impulse move. Okay, for your continuation pattern. And then once I continue to say, I hate calling it a flag pattern. It is really about momentum and continuation that matters here. Understanding impulse moves and then the reaction of sellers after hitting liquidity in here. Now, the last few days have been pretty volatile. So we've been getting moves up, moves right back down, moves right back up. Okay, but when you see the impulse move that is overwhelming volume here, it is moving away from a previous area, and you don't see too many sellers. It's mostly some profit taking and maybe some sellers, and then the buyers come in again. This is market breadth, a bit of a break, some profit taking, market breadth after the next impulse move, and then you can see the pullback as well. All right, so anyway, good stuff there. Not much more to go through, really. I mean, it's pretty picture perfect, and I would suggest watching or rewatching the video in here. The other one we have is a reversal, and we went through this the last few times as well. Very simple stuff, but these order flow events and market mechanics happen again and again and again. This is what makes up those patterns, and that's what we want to understand, and that's what makes the difference. All right, so that's what we got here from Stan, and then I can move over and we'll go over crash. It's been a little while since we've gone over crash, so nice one today, crash, beauty. Let's turn the mic on for him, and let's see here. Run us through your PPI today. Beautiful move. I mean, market is super sensitive to this inflation data, and purchasing managers index is a forward-looking metric. So very sensitive to that, as you guys can see. Beautiful move. So see.
Yeah, good afternoon, Bruce.
Hey, Crash, how are you doing?
Good. Hey, everybody. Glad to be here with everybody again. Thanks.
So
yeah, you have something you want me to answer specifically?
No, just walk through it. I think it's best to just kind of hear your process.
Okay. So most people have heard in here, I kind of have I have my own trading system called Impact Trading System. I use predictive time and price cycles, both on a multi-day and then an intraday basis. So coming in today was the end of one multi-day cycle. We've seen some chinks in the armor with, like you had said, we've seen some very large pullbacks. We've had some violation levels when you look at price structure, and we've had a couple of days of that this last week and a half. We had a lot of Fed speak coming in today. So in the combination of the Fed speak with the news environment and the end of a multi-day cycle, our bias was to have an uptrend day today. So we were looking for the initial reaction, obviously, to bounce down from that news event, because the last couple days has been more negative than positive. But one of the rules that we have based off of 12 years of history is that when you have the first day of your multi-day cycle, you have a low that is established on that day. The next several days, the market wants to try to bounce or correct or end above that initial low established at the beginning of a cycle. So that low actually happened to be 18,160. We started off below that coming into the market today. So our bias was that in order to fulfill a 12-year history of a 90% chance of ending up during RTH above that price at 18,160, we knew that price was probably going to have a bias to climb above that, particularly since we're at the end of a multi-day cycle. So that was just kind of our big picture thought process. So now you look at Bookmap. That's what I like to do in the mornings, right? I always talk about, I look at my price targets that I have. I had 3 main price targets today. Okay, the first one was going to be the 3-day central pivot zone, which I put on that. It's actually, I think, on the next slide. I don't know if you have it on there. Did you put both slides? Yeah, the next one. So you can see I put up there my first 2 initial targets. We had at 292 was the 3-day central pivot zone. And then I had a price zone at 303. And then my second zone was up at 488. So those are kind of my 3 zones for today that we were looking to hit. So when I like to look at the book map to correlate with the zones that I come in the next day with. And so that's what I was trying to show here is when I do my pre-market analysis or I'm doing trading, I'm always looking for book map liquidity. And then when I enter a trade, I'm trying to use Market Pulse VPI because, as you know, I like to try to get in at the extremes on my particular trade. Now, on this particular one, I don't normally recommend people to trade the initial burst of move because it happens so fast. It's hard for anybody to catch this. But we did have a bias that was coming up. And so when we got that initial pullback, we legged into that trade that you can see there about 5:45 time frame. And then we had our targets that we had already pre-identified to go up to hit after that. And then in accordance with what you're talking about, you like to see the impulse move up, and then you like to see the pullback and then a continuation of the trade. And that's actually what I like to see as well. So we get a mini one right here to that initial target frame. But if you were to zoom out the chart a little bit more, and if you looked at the time frame of around 7:20 Pacific Standard Time, which is 10:20 Eastern. You don't see that on this particular chart, but you actually do have a full, basically a 61.8% retrace, which was the initial move up, a retrace down to that Fibonacci level for even the larger pullback impulse move in which we actually caught more of the move after that. So this basically is showing 2 examples of what you tried to point out. Get the impulse move, get the pullback. I just happen to try to buy the pullbacks instead of waiting for the second phase of the impulse move. And that's kind of my trend. And then depending on the situation, if it's not a news event or it moves really fast, I'll use Market Pulse VPI to try to get in at the extremes, or where Slowdown has his consolidation patterns where Wyckoff springs out. I like to use the Market Pulse VPI, usually at the bottom of those consolidation areas, to get in a little bit earlier to catch that impulse move coming out of that Wyckoff consolidation area.
Yeah, nice.
I mean, I can't stress enough how much I think Market Pulse and the liquidity zones add to somebody's trading. It's magical. It really, really is.
That's really great to hear because what we're working on for that'll be released here I think in Q2 is being able to get an alert on multiple indicators, exactly what you're doing, Crash. So you look at your CVD as well as your Market Pulse VPI, and you want that confluence of events. You'll be able to put 3, 4, maybe 5 confluences together,
Exactly.
and then be alerted, or maybe even we can hook up some automated trading to it. So be on the lookout for that. That will be coming out. I don't know when exactly, but in weeks to come. This will make it a little bit easier to make some decisions.
Yeah, I'm really looking forward to seeing that because, as I said, I think confluence is how you really reduce risk. If you can get multiple points of confluence on your trade setup, it's all the better.
Yeah, that's fantastic. It's really great, Crash. You got a great system that you've developed here. One thing that I really like about what you've developed here is you've integrated that into your higher time frame. That's a big leap, and that's where you're going to just see massive gains. and compared to just like, small gains for the day or over the week. Because just like you said, you had a plan. You were looking for the I know before you'd mentioned ATR. You'd mentioned you got your initial targets up in here, but you're looking for this to go to the upside. And before even the news event came out, you were looking for this. So
That's right.
so now this confirms it with the PPI, and then you're aggressive with your entries, but you're holding also for that higher time frame.
Yeah.
So
And I know it's not easy, but I really try to encourage people that are listening, follow, what Bruce says about that impulse move. I love the impulse moves. And a lot of times the first impulse move for a lot of people is too fast. And again, it's situation apparent, right? A news event is going to be too fast for almost everybody because it just slams the market. But outside of the news events, you can see those impulse moves. You can listen to the sound inside of Bookmap, right? For the volume pressure or the VPI. You can get both of those kind of tick strike type sounds that gives you an idea of when it pulls back and then it starts climbing again. You'll get those sounds ringing in your ear. But use some structural type setups. Like if you look at, let's just say this one was too fast for you because it's pre-market and it just the news event, you're just not interested in trading it. Well, okay, well then look at what happens right after the market opened at 1020. Look at that higher time frame pullback because you did have that impulse move off of the news event, and then it pulled back, and at that pullback inside that impulse move, and then the first downward pullback that you're going to catch the second impulse move off of. If you go back and look at your charts when we're done talking, you had like 3 or 4 things. That pink line down there is the VPOC on that chart, right? So the pullback on the larger time frame was a pullback to the mean reversion of the point of control. It was the day one low of the day. So if you look back 3 days ago, it was the low of the day from 3 days ago. You had 2 different Fibonacci levels at that same price. All right. So if you go back and you start putting points of confluence on your chart and you look left a little bit, you will see that pullback and then the continuation of an impulse move, on a big picture time frame over the day, we end up climbing up, 300 points on the day. So it really adds some confluence to take that impulse move up, buy that larger pullback, let it have some confluence, whatever you want, W breakout, double bottom, whatever it is, market pulse, VPI, add all those together and try to catch those moves. That's when you're going to start getting those 50, 75, and 100 point runners. If you can learn to leg out instead of doing, all in, all out. I'm a big, even if you go all in and you don't want to leg in, I'm a big proponent instead of doing 2 minis, do 20 micros or do 10 micros if you don't want to do that. Always leave 1 or 2 runners and just keep trailing it up, and you will start to gain 50+ point trades.
yeah, that is fantastic. This another thing like this the I don't know, I really like the way you integrated this into your higher time frame, your kind of lower time frame entries into a higher time frame move. And then you've got a trade management system that works really well with this too, because you're legging in and legging out all day long. So you still have your bias on your higher time frame, and yet you're reducing some risk, and then you're putting risk back on when you have more confluence again for that higher time frame move to unfold.
And you did a webinar not too long ago with Axia Futures, right?
Yeah.
And if you remember, if anybody listened to it, if you don't, I think Bruce has the link that he can share. If you listen to the Axia Futures techniques of trading, they talked about scalpers, they talked about news events traders, they talked about a couple different options, long-term, overnight kind of people. And one of the things that they really talked about is the concept that I always stress. So I'm pointing it out because now you have a very large trading firm, offices all over the world, Cyprus, etc., and they do the same thing. They talk about maintaining a core position when you get into the trade, and as you leg out, they tell you not to get out of your core position, because what they explain is that most of their traders actually have less than a 50% win rate. And they said that their scalpers have only, between 20 and 37% win rate. But they have, and I don't particularly trade exactly like this, but they have between 12 and 20 days a year that actually makes all of their P&L positive. And what they do is on those days where they see that the market is totally going according to the game plan, they leg in with weight and then they carry the runners. And some of them will let the runners go for days based off of their cycle timing methods. But the point is, if you leg in like what I'm talking about with like 20 micros instead of 2 minis, you have the option of keeping a core position on while you're legging out. And then if it just keeps going up for 100 points, you just keep trailing it and you get to capture more of the move. So my point is, even firms like Axia talk about having a core position and not taking the entire core position off as you leg out in accordance with your game plan.
Yeah, great. Exactly. But, for that to unfold, there's kind of a big caveat here. And that is from your planning. You were looking for this day to do that, right? To continue to trend based on your criteria for your pre-market or your pre-trading plan. So now you're going to implement that strategy because that's one of the more likely scenarios you are looking for the day. This doesn't happen every day. So, if that's a big difference. If it's before the data, you're looking for typically you're looking for a choppy day. So you're going to try to carry a core position through that day? No.
Exactly.
You got to, kind of match this with your pre-market plan.
Yeah, and I'm assuming everybody in here has some kind of website or something they follow for when news events are. I personally use Forex Factory, and I like it because they give you almost all of the news data per day every single day. So you can on the weekend you can kind of start formulating a little bit of a plan over the week. Like this week, we knew we didn't have any news until Wednesday and Thursday, right? So then Monday and Tuesday, you have big moves, and then it goes kind of into a sideways chop for the rest of the days. And everybody's waiting for the news to come out Wednesday and Thursday morning, right? Which then you're going to start getting more of a reaction. Now you look at the news events for today, you get the PPI and the unemployment, and you got 3 different Fed speakers, you're going to see more of a reaction. So it's going to tend to have a day like today be the kind of day where we might climb 200 to 300 points because of those news events and because what's happened to the left side of the chart. So it really does. You got to have some prior planning to start looking at, a week in advance to plan your days out. And then you go from macro to micro.
Yeah, great. I mean, another thing, I know we've mentioned this before about your trading plan, is you're using also these tools like Market Pulse, your fib levels, or CVD, with a pretty volatile market with the NQ.
Yep.
That's a great. This is where all these things kind of align. You want to use the right tools for the right market, and Market Pulse works really with this volume pressure imbalance, and volume pressure works really well with a more volatile market. You get those extreme readings more often, so that's another match here. And these things may seem so obvious, but they're really, I think they're subtle, and they're really important to understand.
They really are. And again, I talk about this too, is I like to have the ES and the NQ right by each other. And if you just look at some of my last posts over the last couple of weeks, I've been doing a lot of focusing on the surfer icebergs again and comparing them to what you see on the NQ versus what you see on the ES. And as you start watching both symbols together, you'll start to see patterns, with a lot of different things that show confluence. And the surfer icebergs, as I like to call them, is just one of them. So, for example, if you went to the next chart, right, that's right below this one, you'll see that a surfer came down at the spike of the news. Down there, right? And so when price, that top chart right above
this
that.
one. Okay.
Yeah. If I guess I just didn't see it on the screen that you had. You can look that a surfer came out as price spiked down there. When you see that occur, I'm also looking on the ES and I'm combining where I'm seeing surfers as support or resistance on both charts. And sometimes you'll see one on one, sometimes you'll see one on both of them. So use them together, the ES and the NQ. Market Pulse VPI does work on the ES, but it is a little bit better, in my opinion, on the NQ. And I just personally like to trade the rhythms on the NQ a little bit better. I can just get more points out of my trades. But it takes some practice, right? So again, use the ES next to the NQ and compare the liquidity zones, the surfers, the market pulse indications, and start getting points of confluence between the two of them.
Yeah, excellent. Really articulate, Crash. Great stuff. We'll maybe have to do another Market Pulse event with you.
Yeah, no, good. That sounds good. Thanks. Appreciate it. Everybody have a great day.
Okay, thanks, Crash. Let's see here. Oh yeah, so it was a long continuation trade. I think we got the idea. But we'll continue on here. Allan, we've got Allan up, and let's see if we can open the mic up for Allan. Allan, they all look the same to me, which is a compliment. It is like the same chart again and again here. And another thing that I really like, okay, again, guys, NQ, he's trading the NQ. Momentum in these kinds of moves happen, more in this kind of market. It's a little more volatile of a market. You can see the move up in here. Now this is his bearish mean reversion and VWAP here. So he's actually trading a momentum move that it kind of is counterintuitive, but you can see the momentum here. But it's actually a mean reversion type of trade. Anyway, the pretty strong move up into I don't know what he's pointing at. He's got his VWAP here, okay. So no, he got in here, and then he took his profit down here. So so this is again, here's the strong move. He's actually taking a counter trend move in here, back down. So there's no buyers acceptance. Yeah, okay. So he's getting his exhaustion up in here. You see high liquidity up in here, and then original plan was to get out of VWAP. He took it a little bit further. You saw probably a little bit more momentum. Yeah, so stronger move. He got out down at the bottom of the range, and some of the high liquidity down in these areas in here. Beautiful, really nice exit there, Allan. I guess Allan is not here today. All right, so yeah. All right, let's move on. We went over slowdowns already. I think this is a little different. This is his spring pattern here. This is the next thing that we're going to go over in the Learning Center. Is range bound trades, and this will be one of them. Is a break outside of a range, a rejection, and a move back into the range. Look at the buying in here. It's like picture perfect. So here's your rejection, but he doesn't know yet. is like this, is this going to turn into like a continuation move to the downside? And you do see a pretty big pullback in here. So he did take some heat here, and then and then it ended up going to the top of the range and high liquidity up in here. There's his take profit for one. Here's his other. Here's his trade management in here. You can see it. He moves it down to where it broke from here. Beautiful. In front of the high liquidity. Beautiful. Reduce some of the risk in here. And then looks like you moved your stop up and then got stopped out up here. So your second take profit in here, you did not take. Yeah. But another thing in here, a slowdown that we had, I think, talked about before, or at least I had mentioned to you before. Like sometimes I see you taking these trades up in here for this Wyckoff Spring, or maybe this one in here, for example, and they're winners. I would imagine, and I would just go back to your database and your data that you have in your setup. This is the strong move though, and then this is the consolidation. Here's the stop run, the trap, the whatever you want to call it, the false breakdown, and then we're looking for the continuation basically. And I'm just so curious if you do have any data on it, like because this is beautiful here. We would assume, because it came from this direction, and we do see there's some heavy selling in here in some of these areas in here, but this is what's moving price, and then we see it again in here. This is what's moving price. Yeah, this makes you kind of a little scared, I guess, or makes me a little scared. But then you see the buying coming right back in here, and that's where you got in, and that's where you're looking for the move to the top of the range in here. And then it really picks up in here, which is really good to see. But there's this relationship between the liquidity and that buying up in here. But yeah, I'm sorry, I got a little maybe a little confusing. The question is, do these work out more if it's in the direction of the bigger trend or impulse move? That would be the question. Or do you find it mixed, like this one up in here? Would this be your false breakout and move back into the range, and then maybe it breaks down? This would be more like a reversal pattern though at that point, right? Anyway, I'm just kind of curious what you think, or what you have found on that. All right, and got Shark Blue, Rob. We got a couple more guys. Let's. I know Shark is in here. So this is also from today. Excellent. Let's see, Shark. Do you want to turn the mic on for you?
Sure thing. Can you hear me?
Yes, there you are. How are you doing?
I'm good, thank you. Yourself?
I'm well, thanks. So do you want to walk us through your trade idea in here?
Yeah, this was fun. This was my first, aside from clicking around yesterday, this was my first actual trade I executed off of Bookmap.
Nice. Yeah, I can see it here and here and here
So
and here.
uh, same thing as always. I'm looking for that rally into supply, which I got this morning. I had a low time frame supply zone right before the bell, and my 1-2-3 reversal pattern sets up there.
Okay, so I'm sorry. The 1, 2, 3 is where again? Point me to.
I actually cut off the trend line part of it here on the heat map, but it's on the other chart.
Okay.
The bar chart.
Okay.
But you can see my supply zone there. I tagged it with the white box.
Okay.
And I kind of front ran this entry. I didn't wait for the 1, 2, 3 to trigger.
Uh-huh.
But this was kind of a lot of convergence for me. I had supply, I had a resistance level, from yesterday morning, and my 1, 2, 3 all right there. And then when I see that liquidity on the offer, I'm gonna take that short every single time.
This
And just
one,
put
this
this
one
one,
in here, right?
actually the previous one. Yeah,
Uh, which one? Up in here?
right at the bell, right at 6:30 at the bell.
Ah, okay. All this liquidity up in here.
Yeah, yeah.
Okay, got you. Yeah.
But this was interesting because I still at the time was trying to learn how to set stop limits because I I limit entry in, but I use stop limits because I'm entering into strength. So if I'm taking a short, I'm going to set my limit order below price and catch it as it's moving down.
Yeah. Yeah. Um, yeah, I can show you that quickly, in fact, if you want. Hold on just a second here. So, in Bookmap, you just you've got your where is it here? Good. Um, where is it? So I've got one. And if you place your yeah, down here, this it's out of order here, in fact. Here's where if you hover over this in here, it tells you this is your stop order type. Be very careful with this one, everybody, because right now it's on market, which is what it should be on. But if you use stop limit in here, what can happen is it can go right through your if I left click, see how if I left click hold above price here and hold down the shift key and left click that shift key down, it places a stop order up here. Okay, see the line type here is a double dash line,
I do.
and this is now, it says stop limit. Now this is to take you into the trade, right?
Yes, I'm using them to enter.
Okay, so what has to happen on this here is that once this level is hit, it does turn into a limit order. Now that'll give you that good price, but if let's suppose that price goes right through and doesn't come back, you will not get filled. So
Okay.
it can skip through it. Just be aware.
Okay.
So and if you don't want that, and that's why be very careful here, because just for in general to everybody, the stop order type it is by default, it should be market. Keep it at market. And now if I left click hold, shift down up here, then you can see one and it's just stop. So it's the same line here, line type, but if I get hit here, then it's just going to be a
It's gonna
once
mark it in.
it'll be market, exactly. So I might get slipped, but I will get in. So that's the
Okay.
difference between the two.
Well, I have a learning curve ahead of me. I really enjoyed today. That trade you were looking at was fun because I entered, I scaled out, I ended up covering the full position before my target was hit, and then re-entering.
Yeah, let's
Same thing, scale out again, and then cover the full position at my target, which was the trend line pivot low.
say
And
that again.
thinking,
Run us through that again. I'm sorry. So here's your entry on the short.
yeah,
Okay.
and then I scaled out right there, and then ended up covering the full position just right below that, but I hadn't made it to my target yet. And this was more me playing around with the execution on Bookmap. And so I re-entered uh
This is your
right at
re-entry.
6:30, 6:37-ish. Yeah, I
Yeah.
re-entered there.
Yeah.
And then same thing. I scaled out and then covered my full position there, which which was my final target of my trade setup. Now this is where what Crash has been preaching really slaps me in the face, because what I posted in my journal was, for the millionth or the 10 millionth time, I'm kicking myself for not holding runners because that short just kept going and going and going.
Yeah, yeah. I mean, it depends. Is on the day, and like Crash was saying, it's you got to have that in your pre game plan. So there were some weird things that happened before the data this week. And it was on Monday or Tuesday during the live webinars, at 10, the all markets webinar. And like, it's like, okay, we think blah, blah, it's going to go short. And we did put an order in, and it went, and it's like, wow, well, that got filled right away. But then it just dropped and dropped and dropped. I don't know if this was the same day or not.
Can
But
you grab the candlestick chart, Bruce, that accompanied this trade?
I don't think I put it in here, but I can go to the Academy page. Hold on.
So typically when I have opposing supply and demand zones and they're wider than my trend line,
Uh-huh.
I like to scale at the trend line pivot.
Here you go. I think this is it.
Oh yeah, so you see where I cover my full position at the trend line pivot low. My entry was up here at the supply zone, while another that just kept going and going and tagging the opposing demand zone, which was another, I don't know, I don't have the chart in front of me, but it was another 50 points or something. So typically I would set to scale at my trend line pivot low, and my final target would be at demand. But I was just playing around with execution on Bookmap, and I guess I was enjoying getting in and out of the trade.
Yeah, yeah. How did you like it? I mean, I really enjoy it. I can't imagine actually trading differently. But
I like it a lot. I played with both doing it on the chart as well as on the DOM, and
uh-huh.
I typically trade off the DOM, never a chart. But I really enjoyed it. I like the way it tags your order, like where your order's resting, where your order moves, and then where your order fills.
Yeah, yeah, yeah. The That's good to know. Let us know if you have any feedback on it. The same if you bring up Dome Pro, for example, uh, and uh, and trade from the Dome or the Dome in the columns, it will still show it on the chart as well. So
Yeah, I noticed that. I noticed that today, and I'll be once I get at it and get a little more comfortable with
uh-huh.
the right click, shift click thing.
Yeah,
I'll be trading off Dome Pro.
yeah. The Dome Pro actions, like any other Dome. So it's the right clicking is actually it's a different kind of action um, than trading from the Bookmap chart. Just so you know, not to confuse you. So if you go to the let me just show you here. Go to bookmap.com and go to the Learning Center, Education Learning Center. In the Getting Started in here, this is where you go. Okay, for all the trading is in here, right?
Okay, I found a 2-minute video that you had put up at some time that really helped.
Yeah, there's one from the
Was
Dome.
specific to the Dome Pro.
Yeah, yeah. This is a new one, and it's in here. It's under add-ons, and it's under trading add-ons, Dome Pro, and then placing orders. It's this one here. It's just a couple minutes long. So if you guys trade from the Dome, I'll put this into the chat for you guys if you want to
Yeah, I
take it.
really enjoyed it, and I'm excited to get it dialed in. I'm only connected on one of my 4 accounts, so I'll still be trading my other accounts off of Tradeovate,
Uh-huh.
but I will be leaning into it with my new account.
Okay, excellent, excellent. Great to hear. Yeah, here's the video over in YouTube as well, so you guys have that. And let's see. Anything else you want to go over, Shark?
I just have one quick question on that chart. If you look at my CVP Delta column, I have a white box there where I'm looking at possible trap buyers.
Uh,
And Slow had mentioned that when it's a lot of delta at a single price level,
where's your white
that it
box? The
will
white
be a
box
nice
up
for
here.
for trap participants. Yeah, yeah, my
Your supply
chart
level.
volume profile delta column
Okay.
right there, right there.
Uh-huh.
Does that look like trap participants to you?
Yeah. Yeah. I mean, I love this column in here. I mean, like, I see your white box. Okay. Um, yeah. I mean, like, basically, if price is moving away from that area in here, I mean, you can just clearly see it here. Uh, so, I mean, these guys that bought in here, any of this buying in here is going to, they're going to be sellers down in here. And this is where here's this looks like trapped sellers. Now it went lower, but you're looking for that cluster, and then you're looking for that move away from it. And yeah, I would say, like, yeah, this is it. Like, this is kind of odd action in here to see, actually, like, this kind of move down, and you're still seeing this pretty big cluster of buying.
Stan recommended I start looking for trap participants, so I'm gonna start trying to tag those in my posts.
Yeah, yeah, yeah. Sounds good. Yeah, this, I mean, it just makes good sense. It's an easy kind of thing to weave into your plan, is to look for the traps, because if you can identify those players, you're pretty sure about their actions. And that's the beauty of it. Like, if these are people buying in here looking for this, like, yeah, happy days, this is going up, well, and it moves away from them, they're gonna not be so happy anymore.
Once they hit that pain threshold, like Carmine was talking about, they're gonna hit
Exact
that pain threshold, and they're all gonna start bailing.
exactly. So these guys are compelled. It's really easy to see. These guys are compelled to sell, and they do. Now we don't know that. We're speculating on that, but you'll see it again and again and again as it pulls away from those areas. Here's another one in here. I mean, like, I think it relates to mostly these guys in here, and then this is a real nice move away, as you can see. I mean, it look, it's another thing to weave into your plan, potentially. And it's I think it's just a pretty easy one. But
I've never had the ES micros up on Bookmap. Whether I'm trading minis or micros on my execution platform, I'm always watching the minis on the heat map. But if I want to trade micros on my account that's attached to Bookmap,
uh-huh.
if I subscribe to the micro contracts instead of the mini contracts, am I going to see the exact same data?
No, you won't. I mean, but because if you're looking at the MES, you're looking at a different contract. That's the micro. It'll probably be similar, but there's this feature in Bookmap. I'll show you it here. It's it's this one here. Now we used it for the competition, the cross trading right here. Okay, so do I have? I don't have it up. Let's just open up the. I have, yeah, for the competition. Here it is here. All right. So if I subscribe to this and I go to the trading, this is what you'll need to use. Is the oh, I have to be in live mode even in here. But it's this cross trading panel in here, is what it's called. So you'll select, you'll trade off of this instrument here, but the trading will take place in another instrument. So for example, with the ES, you will have to be in live mode. See, I'm in sim mode down here, but you will have to be in live mode, and then this will be available, and you'll have to open up the MES as well contract, and then you'll select it in here and press start. So when you'll trade off of the liquidity and the price action in the ES because it's better liquidity, better transactions, but the transactions, your transactions will take place into the MES. Okay, it's a great
And
feature.
the little lines and the triangles, the entries and exits and edits, would those show up
Yes,
on ES? Or okay,
yes, they'll.
perfect. I'm gonna go back through some of the webbies that you did during the competition, because you broke down how to set that thing up several times.
Yeah, it's great. This was actually something we had years ago. It was Futures Trader 71 requested it because there was a lot of people that wanted to trade micros, and this was before there was even the MES or the MNQ. It was there was micro gold, micro
Thanks,
crude,
Flo.
and that was it. Yeah. Anyway. Yeah, there. Slowdown's got it there for you. Exactly. It's an older video. So, all right.
Fantastic, guys. Thank you so much. I appreciate the insight and the thoughts and the knowledge shared there.
All right. Thank you, Shark. Let's move on. We got a couple more guys. This is a longer session. I'm appreciate you guys hanging out a little bit longer. We haven't we went through the competition stuff and debriefed last time, so we wanted to open the mic and do a longer session with you guys here. All right, so that was that's why we're kind of already at an hour and a half in here. But I don't know if let's see, Rob is in here. Yeah. And Allan is next, and that'll be the last one. Let's see if you want to go through your transaction or your idea in here. Pretty simple stuff you're looking at. Not enough volume. If anything looks like this looks like a fake out in here.
Yep.
Yeah, I mean,
Sure,
yeah,
I can
yeah.
launch into this.
Once you go through, yeah.
Yeah. So, hey Bruce,
Hi.
good to hear from you, traders. Yeah. So I had a pair of posts on this day. What I've kind of transitioned to, like a little context, is I had a pretty rough March. All my continuation setups were failing. I'd kind of getting getting faked out. And so like one day I just thought, well, why don't I trade the fake outs? And so what I've been doing for this past month is working really well as I look for a range in which price is kind of bouncing back and forth in. And when it starts to break out of that range and fails and comes back in, I take it to the other side. So I think the cool kids call that Wyckoff Spring, but I call it the breakout fake out because that just means something to me. Like it paints a context, it paints a picture that with it comes all this criteria. So what I'm looking for, and so this was a documentation of what I'm not looking for. But for my setup, let me bring up my checklist. What I want is the setup, which is prices in a range. The trap, meaning high volume breaks price outside of the range. And so here what I'm documenting is that I was looking at this. I was looking to take this short. But one, as I noted with that little rounded note, is I like a more rounded breakout. So I want buyers to get trapped, like a lot of volume, to take price. It's the one to the far left. I want price to kind of see what's kind of happening on the right side. I want price to go up, maybe tag some of that higher liquidity, and then higher selling volume, take it back into the range. And once I start to see that, what I'll look for is I'll start putting buy sell orders. I think that's what you call them, right back inside the range. Kind of do like kind of leg in approach, and try to take it to the opposite side. The post right before this one had an actual trade that I took using this setup. And this was just me documenting like, all right, I definitely don't want to. This is my like warning signals that if I see something like this, I should stay away from this setup.
Okay. Got you. So this is a filter for you. It worked out, but
Right.
this is a filter for you, and you're like, this is
Right.
this is not what I'm looking for.
Right. And so actually what happened right after this, when you see that kind of buy volume that's kind of starting to push out right around 654.30. So that was kind of more of what I'm looking for. But as it started to come back into the range, and I have another picture that shows that, high liquidity starts to step in to defend right at that green line. So you started to see high bid liquidity started to step in, and so I pulled my orders. And what ended up happening is price hugged the top of that range, kind of, and broke out and took off.
Okay. Let me see if I can bring that up. When did you post this?
That was yesterday,
Yesterday. Okay. See if I can.
right above
Right
Green
above
Runner.
it. Yeah. Okay.
There's that post, and it's got a couple of images, and then the post right above it is the actual setup I took.
Okay.
Yeah, there you go.
So here it is. Okay, great. And you're trading from the chart. Excellent. So we got some trade management stuff we can take a look at. Actually, let me copy this here, and be easier just to put this into. Oh, it's too big. Okay. Yeah, I don't think I'll be able to do it. Yeah. All right. So we'll have to look at it here.
Sure.
Okay.
Right. So there's the setup. There's
Uh-huh.
the range that
Uh-huh.
gets established.
Yep.
And then there's something that says like, all right, so here's the fake out, or I'm sorry, the what did I call it?
Fake out,
Blank
breakout.
on it. Yeah. Where's my
Here.
Yeah, thank
Here's
you.
your fake out.
So that's the trap, right? So you're gonna
Mhm.
see volume coming up, pushing, like you got the big volume dots, you got the volume kind of stepping into the bottom of the volume bars. I think the CVD VPI was starting to spike.
Mm-hmm. Yep.
And so then selling volume starts to bring price back in.
Right.
Wasn't a ton. So that wasn't like the best signal for me. But there I put my order. And unfortunately with this one, my stop was way too tight. And so that got tagged. But my second order got filled, and then that one worked out.
Right. Okay. So I see. So small stop here, and then you took it again here, and then you covered down here.
Right.
Okay.
Originally, what I would have done with that first order is covered right there the VWAP, which is that pink line, and
Uh-huh.
that second order would have been a runner at the far end, at the other side of the range, and that's actually how the trade played out.
Right. Okay. Makes sense. Yeah. I mean, like, whatever works for you. I mean, like, in something like this, the continuation pattern. I understand what you mean. It can be kind of tricky. But there are some confluences in here. Now, first off, we don't have a higher time frame kind of reference, really. So it would be good to see that. But we see a lot of liquidity in here, and it trades all into it up and through here. And we also have our stop run here. So the question is always, after something like this, does it accept or reject? And here's where it rejects when it comes down below here, the fake out, just like you mentioned here. And like Shark Blue was saying, like with his volume profile of delta, this would be your trap, and then your move back in. So whatever the criteria is, I mean, you could make a case, and I'm not trying to justify the continuation pattern, but I mean, you could look at this as a mini flag pattern in here, and then it just fails. So
Yeah.
I don't know, like, but you've got a lot of criteria in here that is aligning really nicely with your breakout fake out trade.
Yeah.
Go ahead.
No, I was gonna say yeah, definitely, and sorry to interrupt, and I'm continue to work on it. Like Crash just pointed out the VPI and CVD, and that's something I'm looking at.
Uh-huh.
So if that's what I'm pointing to right there,
Uh-huh.
and I don't really know what that means from like a technical level just yet, but for the on the trap, so you have the big volume, and then if you look at the subchart, you got the CVD and the VPI spiking almost to the same point.
Yeah.
And so that seems to be something I'm noticing quite often that leads to those nice fake outs. I just don't know what that means from like a technical or like a order flow narrative, but just a pattern
Oh,
I've been noticing.
it's pretty simple. Here you've got, you've got the SI indicator, so huge stop run, right?
Mhm.
And high liquidity, and extreme volume, and of course CVD is going to be up there pretty high as well. And but then the question is, does it accept and continue? And this is where you don't want to see this kind of volume come back in after this. You're looking for a low volume pullback, not high volume. And then this is where you kind of bail on that idea, or you're looking for taking it the other way.
Right, right.
In this, so you do have criteria in here that does match. I mean, this is what exactly what Slowdown looks for with his. He looks for that stop run or high liquidity, and then back into the range, the to the other side of the range.
Yeah.
So look, this is where great job. You identified something on your own, like it's working for you. Stick with it. Keep going with it, and keep documenting this trade. It seems to resonate with you, and build out this criteria.
Yeah, thank you, Bruce. Appreciate it.
Yeah, I think you're onto something. And then you've got like some help here from Crash, from Slowdown and others about starting to put together some of these confluences as well. That should help quite a bit.
Yeah, no, definitely. Thanks, guys. I can't thank you enough.
Excellent. Well, thank you, and for taking trades in here as well. Like this is really helpful to look at the trades, to be able to see what you're coming up with. Then we can give that feedback. All right, Rob, do you mind if you have anything else we'll move on to Allan. I don't know if he's in here or not, but we can take a look. I don't think he's in here. So, all right. Well, let's just take a look in here. This was the text he had written in here, and then let's take a quick look at his chart. Guys, some of the other guys in here, CMJ, Steven, let's see who else, Rubicon trader. Apologies. I mean, we didn't have anything. Actually, CMJ, I was going to cover you. I didn't see anything in your spreadsheet, so that's another thing. I'm going through some of the Academy posts, and I don't have. I didn't see it in your spreadsheet, so try to put it into your spreadsheet if you can. I mean, this is how we're counting it, and this is how you'll be accountable for meeting those thresholds to get Bookmap. So it's a good habit. Please just keep doing it. Get in the habit of it, because even if you're not a part of the Academy, you're gonna want to document your trades, and you're gonna want to go over them. So just do it for the Academy, and then you'll have a nice list. We'll give you feedback, and you could get Bookmap for free. Right, so as our thanks to you. Anyway, it's that's the way we're using it, and we're managing it is through the spreadsheet. All right, there's a lot on here. Boy, I don't know if I have the bandwidth to go through it in here. Let's see. you know, this, what day was this? This is on the 9th. Okay, so beautiful move down into high liquidity all the way through. Sellers just annihilating it and going through these areas in here. He's got his absorption indicator in here. It's just pinging left and right all the way down here. And then you see some absorption on the selling in here as well. The on the way back. So maybe the setting might be a little too low. I'm not sure, but these are pretty big levels. Maybe not. I mean, these are pretty big numbers in here for absorption, and a beautiful pullback in here. Not sure why you wanted to cover so quickly. Maybe there was just reducing some of the risk, and then I'm looking for your second one in here. Yeah, I can understand that, reducing the risk in here. But this is such a strong move in here, and if it's hitting a technical level for you, which you say is your initial balance there, then you can look for the continuation move. This is your low volume pullback. Unfortunately, you're covering the volume in here too, but we can look at the dots. We know there's a lot of selling in here. It's hard to kind of see in here, but looks to me like not too much buying. Okay, not too much buying, not too much of anything in here, to be honest, until sellers take it here and then they're gone. This is another. These are the kind of shift moves like we're talking about. Sometimes they start up here, but a lot of times they'll start here. The volume will pick up, bottom edge, it breaks, and it just goes. And it moves away from previous consolidation areas. And on the higher time frame or a bigger consolidation, also here's a smaller one. And this is, again, like how you can use that same concept of, you know, the impulse move, a consolidation period, and then more volume for a continuation move. And I can see this is where you got your you got taken out here on your trade management on your second one. Okay, never mind. And Jesus, right in front of me, here and here. So looks like you had 3 on. No, you just had 2 on, right? And then this took you got your target here actually, and you did not get it on your stop. Excellent. Yeah, be maybe a little careful on this is pretty aggressive on your moving your stop, trailing your stop down. I know you don't want to give back, but this is a strong move, and we look for that continuation move until we see something else in the order flow to support it. I know that's a lot easier to say, especially in hindsight. I hear you. Like, you know, this is heck, I'd probably do the same thing, and it would kill me to if I left it up in here and then got taken out, right? So if you probably saw this, maybe this high liquidity getting filled, and you're like, yeah, I'm going to be a little more aggressive. That makes sense. Anyway, good stuff here. I think that's it, Steven. I'm sorry, I don't have anything for you this time, this round, but we'll get to you next time. You've been doing some really good work, and we covered you a lot during the crypto debriefing, and that was awesome. Really, you had some really good comments. Yeah, that's everything, guys. Unless anyone has any comments, final words in here, we'll wrap it up. No? Okay. Excellent. All right, guys. Well, anyway, yeah, thanks everyone for coming. Don't forget, we integrated now the Bookmap Academy with the Blue Jacket, or vice versa, or whatever. They're one and the same, basically. So you might as well just put a hashtag into your content as well. You know, Blue Jacket competition, so BJC. And if you're only interested in the Blue Jacket competition, and you don't really care too much about the Academy, well, at least you might get some feedback. You'll need to post in the Discord Bookmap Academy room anyway, and partake in the community there, and post your stuff, and it'll be good. Be good for everybody, right? So yeah, thanks for coming, everybody. Have a great weekend. We'll see you tomorrow in the All Markets webinar, and that's it. Yeah. Okay. All right. Take care, everyone. Have a good evening. Bye bye.